Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I'm going to be talking about the stock market and telling you guys what's going on. Today I'm going to tell you why you should sell Apple stock, why you should sell silver, and why you guys should anticipate the stock market to continue to fall as the dollar continues to rally. But first, let's talk about Apple Incorporated. As you guys can see, Apple has broken below a major trend line. And I just want to mention this to you guys because it's very important that you guys recognize that Apple is falling in the session. That break of the trend line is extremely important because it's likely that this negative trend will most likely continue for many weeks to come. I anticipate Apple stock to fall down to around $465 per share. So keep that in mind while you're trading, guys. I think that Apple has much more downside for the next couple months. I think the stock could fall an additional $100 per share from current levels over the next 3 months based on their lack of performance. And more importantly, it seems like Apple has run out of new ideas. An Apple iPad mini, I did talk negatively about the Apple iPad, but an iPad mini, it seems like they're trying to directly compete against the Amazon tablet, which I don't blame them for because they do want to basically push out as many competitors from the marketplace as they can. The only problem I have with it is that it seems like they're chasing after pennies rather than trying to create a new product category that could really generate a lot of revenue for Apple for many years to come. Now let's look at the next stock, which is American International Group right here. Now, in light of what's happened with the hurricanes and everything, I want to mention that it is likely that AIG could lose additional money. And part of what I think of in terms of selling short American International Group is just that it's an insurance company. We're playing on the fear that everybody thinks insurance companies may lose a lot of money, maybe tens of 20, 30, 40 billion dollars in insurance claims. And AIG is an insurance company, so the market has every justification for wanting to sell the stock. Now let's move on. Let's talk about the Euro-US dollar currency pair right here. Now this is another chart that really interests me. I want to point out the fact that the Euro-US dollar right here is breaking down on a trend line, and it is falling below the 50-day moving average. So all in all, I have a lot of negative pessimism towards the Euro-US dollar. I think the Euro-US dollar has much more downside. And again, if you guys recognize that if the Euro-US dollar is falling in value, that also means that the dollar is increasing in value. Now, when the dollar increases in value, what typically happens is that commodity prices fall, and so does the stock market. So it's very important for you guys to watch the foreign exchange and be on top of it because it is a good leading indicator for where things may go. Now let's move on to the next chart, which is Ralph Lauren Incorporated. Now I basically threw in the trend lines right here to point out the fact that Ralph Lauren, the stock itself, is trading in a pattern. It is trading in a sideways pattern. And the main reason why the stock hasn't necessarily sold off yet is because, again, Ralph Lauren Corporation is a clothing retailer. It is at its cyclical heights. Basically, people are going to be buying a lot of Ralph Lauren clothing. We are getting very close to Black Friday, and Black Friday is a day for where people make a lot of money, especially the clothing retailers. They generate a lot of revenue. I think I read a statistic somewhere that a huge percentage, maybe around the 20-30% of all the revenue that is generated from a store is generated within one day, which is on Black Friday. And if Black Friday outperforms based on the positive employment data, which again, non-farm payrolls did increase by 171,000, which did beat estimates, then yes, it is likely that companies like Ralph Lauren may do much better than what we had anticipated. Although the market in general is selling off, clothing retailers and the cyclical plays are doing a little better than the rest of the market, mainly because the cyclical players are set to earn a lot of money during this time of the year. Now let's move on and talk about silver. Silver has done awfully, as I will mention right now, is that silver is falling down. I anticipate the price of silver to continue to fall. I am a bit of a pessimist on silver. It has broken that bearish flag formation. I wish I could point it out to you guys much easier, but yeah, it basically broke that trend line. And it has fallen all the way down to the 200-day moving average. I anticipate the silver market to eventually reach down into the 2880 and the 2790 area, mainly because silver is being affected by the currency markets. And if the Euro-US dollar does fall down, that also implies that the dollar will rally. When the dollar rallies, the commodity markets fall, and basically in that instance, silver should continue this downward trend as the dollar continues to rally. I think this is the path of least resistance, and I think that overall the markets should continue to react this way in general. Now, I want to also mention that silver is, I did call the rally on silver many months ago, and now I'm thinking that I'm going to be calling a downtrend for silver for many more months to come. So we had a good rally in the market. The market continued to buy up silver, but now it seems like they're going to sell off silver. And as soon as they continue to keep on selling the commodity, there's going to come a point where silver will find a base. But I don't think silver has found its base yet. I think it's going to continue to fall, and that's why I'm going to be a little pessimistic on silver for many months to come. Standard & Poor 500. So let's talk about the basic stock industry right here. Now it seems to be trading in somewhat of a pennant formation. Again, I'm not the best at putting my iPad up for shows, but basically the S&P 500 is falling. It is in a downward trend, as you guys can notice. And basically, it had a very bad day today. It fell by 1%, which isn't very good, but it is typical market behavior to sell off an asset. And basically, S&P 500 was sold off today, and it's basically because the euro-US dollar had a pretty strong decline. The dollar rallied. Basically, there's with a falling euro-US dollar, it implies weakening demand for investments internationally, and it also implies uncertainty in assets and investing and risk appetite, and overall things in Europe may be getting worse. But it's not always been the case that if the euro-US dollar fell, that there was something really negative going on in Europe, because there has always been something going wrong in Europe to begin with. So all in all, I think of the euro-US dollar as an indicator of global risk and risk appetite. I think that if the euro-US dollar falls, it just means that investors are being much more risk averse. And basically, with risk aversion comes declining asset prices, typically commodities and stocks, which I've already emphasized many times, but I'm going to emphasize it continuously because it is important. It is the cornerstone of how a lot of technical traders trade these days. Now, the USO, basically the U.S. oil fund, has continued to fall. Again, I did highlight earlier that the euro-US dollar is falling, and basically the crude oil market should continue to fall as the euro-US dollar falls. There's a correlation with how the euro-US dollar and the commodity market trades. The correlation tends to hold itself together towards the front end of a downtrend, but as the downtrend continues, the correlation does seem to die off towards the end of it or the mid-end of it. Okay. Now, for the final chart, we are going to be talking about the U.S. dollar index, the UUP. Now, the dollar index has had a pretty decent run. But I do anticipate the U.S. dollar to continue this upwards momentum. I think that it's easy to assume that the U.S. dollar index should at least reach the $22.28 mark. I'm not talking about the UUP, the dollar index fund. And basically, the main reason why I'm optimistic on the dollar is because the euro-US dollar was breaking down on that trend line. I think the euro-US dollar has much more room to fall, and because since the euro has a 50% weighting on the dollar index fund, it is likely that if the euro falls, that the dollar will rally quite substantially. So that's my basis for why I think the dollar index has even more room for the upside. And I think that the dollar index will eventually reach the 200-day moving average, which is trading at $22.28. Now that just means that the stock itself has maybe around, give or take 3 to 4% in upside, maybe not even that much. But what I'm really trying to point out is that a 5% upside is a lot of upside for those who want to be short the euro-US dollar, because a 5% deviation is worth around anywhere from around, give or take, 500 to around 1,000 pips in that range. And basically, if a trade is worth around 500 pips in the foreign exchange market, that's worth a lot of money, especially because of the sheer amount of leverage. For all of you guys who don't know that, but for the guys who do know that, well, there's no point in me beating the dead horse and repeating it, but there might be some people out there who might not know. So overall, the outlook is negative for the markets. I want to re-emphasize that. I think that the euro-US dollar will continue to fall. I think that the dollar rallying indicates that the overall demand for investing has dropped. A falling euro-US dollar also implies that demand for investments is dropping and risk appetite is definitely leaving the market. Now, there are key pockets of strength, which is the clothing retailers, and cyclical trades like computers and stuff might be doing a little better. But I'm looking at the clothing retailers mainly because their stocks are able to hold on despite the sell-off in various other sectors. After the winter season, though, I do anticipate clothing retailers to be treated just the same as any other stock. And I anticipate those stocks to fall as their cyclical cycle is over, and there's probably not much more upside bias to be anticipated during the middle of the year, in the beginning of spring, or in the beginning of or towards the end of winter, so to speak. Other than that, you guys got the message here. Sell your commodities. Avoid buying silver. Don't buy gold. Don't buy crude oil. Chase after bonds. Bonds are a good area to be investing in right now. Not because of their not because their yields are improving, but because the value of the note itself is going to appreciate moderately. And I think that it's better to be positioned defensively. And if you are a futures trader, then it's better to leverage it's better to use your leverage on those treasury bonds, those treasury futures, and perhaps those or selling the stock futures, as in shorting the stock futures and stuff like that. It is a good idea to buy into the dollar, and it's generally a good idea to sell the euro US dollar at this point. And for all those high growth plays like Amazon and Apple, those companies have been growing a little too fast. I think that the momentum is kind of cooling off on those stocks, and it is likely that those higher growth plays will be sold going into the next couple months as well. The economic data has been pretty good. However, we did get hit by a hurricane. That hurricane may affect us economically. So all in all, there's the trade-off today. We had good economic data, but a negative social catastrophe. So it all kind of balanced out, and it wasn't able to help the market by much. So that does it for me for today. I hope this 12 minutes of information was helpful to you guys. And I'll try to be much more frequent and update my channel much more often from this point onwards. So take care, folks. I hope you guys have a wonderful weekend, and I hope you guys continue